Hi, let me know when to start. We are okay. Reach out any of the team members once we are done, or you want to wait for 5, 7 minutes. Let me know. I can just log in. I'm already logged in. We can just start the call whenever required. Hi. Shall we start, Richa? Are we good to go?
Yes, yes, Nupur bhai, we can.
Yeah, hi. Thank you. Good evening, everyone, those who have attended in India, and probably good morning and good afternoon to the respective time zones, to my international investors as well. Today's call will be taking through one of the most important aspects of investing that has changed the landscape of how the wealth has been managed in India. As a house, Prabhudas Leeladhar started the journey of quant investing in 2019. Since 2019, we have built one of the robust and tested architecture over and above quantitative investing. Today, we have very large team on quant investment side, and our team comprises of the various backgrounds of people led investment team led by my colleague Siddharth. So I'll just take you through the team structure first, so that will give you some kind of confidence that what are the people. So this is the kind of people that we currently have in our quant team. We have data scientists, we have macro analysts, we have economists, we have technical analysts in our team, we have Python program developers, financial engineers, risk analysts. So there are host of different profile of people who are part of our team. This team comprises of 20 plus team members, and we, that's pure on an investment side. Obviously, the business and other aspects. Just 1 second. Uh, Sorry. My apologies. I had some urgent call which I had to take. So these are the profile of people. In last 4.5 years, we have built a very robust infrastructure with all qualified people, and we have ensured that this thing remains good for a real long time. And with our team, over the period of time, we have not only learned, but we've also made very changes in our strategy. Today, probably our flagship product, Aqua, has been ranked as one of the best performing strategy in a flexi cap category, and it's been among the best funds also in flexi cap in probably last year and a half. And we have outperformed all leading flexi cap portfolio managers in last 1.5 years. What we do slightly different in this strategy is what that as an investor that you all are required to do. The same process of investing that we have tested for nearly 3.5 years, been live for now more than a year and a half. Same facilities we are offering to our overseas investor under our dollar fund. So Aqua Dollar Fund is the same investment process, the same investment strategy, same stocks, that will get invested only is that a vehicle as an investor that you will be able to invest via global fund, whereby the investors documentation will be done in the jurisdiction outside India, and investors will invest in dollar. They will redeem the funds back in dollar. So the investment and redemption both will happen only and only in dollar denominated currencies. That's the first thing. Okay. Second, the taxation will be borne by fund on the because as an investor you will get the NAV. First, I'll take you to the operational aspects and then I'll take you to the strategies. In case if you will have any questions, please feel free to ask in Q&A and the chat box. So, as an investor, we will accept the funds from you in dollar denomination. The taxation will be taken care at the fund level. I have my colleague from Dovetail, Rohit, who's also on the call. Any compliance related questions, any operational related questions, Rohit will be able to take. Usually this NAV will be calculated on a monthly basis. So whenever you will give us funds, you will get a month end NAV. Similarly, whenever you will redeem, you will get a month end NAV. The only differentiation is that this is an open-ended fund. So investors can come in anytime, investor can move out anytime. When investors can come in anytime and investors can move out anytime, they will get an advantage to participate at a month and NAV which gets calculated by this one. This fund is based out of, it is administered in Mauritius. So all documents of investors will be done outside India in Mauritius jurisdiction. The name of the fund is Tatwa Global India Aqua Fund. Okay, so this is a PL Aqua Fund. This is the structure, how the funds will work. So the investment route is that it's a Cat 1 FPI route. The advisor of the fund is Prabhudas Leeladhar Advisory Services. Custodian to the fund is DBS, and the bankers to the fund is State Bank of Mauritius. All investors outside Indian jurisdiction, be it an NRI or an overseas resident or corporate body outside India, can participate in this fund, and the subscription is open for every one of them. Probably, as I said, the activation time will take 4 to 5 working days. Once we receive all the documentations, we can process your application digitally. Only problem is that you will be able to or you will be required to send the physical copy of signed application later on for compliance perspective, but on digital mode your application will be processed and the subscriptions can be done. Probably the subscription time is between 20th to 25th of every month. As I said, that we give month and NAV, so we expect that the fund should hit our bank account on or before 25th for that month NAV to be reflected in your investment. Probably fund takes roughly 5 to 6 days to hit the Indian account. Similarly, the redemption can be accepted between 15th to 20th of every preceding month. As I said, the NAV is calculated on the month-end basis, and necessary tax certificates will be provided by our partner Dovetail. So anybody who needs the documentation, those taxation certificates can be provided for them. Probably now I'll come little bit more on the strategy and how the quant investing or the strategy or the quant has been managed by India. So what we do in Aqua as a strategy is that this is completely first ever sector agnostic, style agnostic, and a benchmark agnostic strategy. What do I mean by sector agnostic? Sector agnostic means the strategy which will not only invest in different sectors, but it will not mimic the benchmark. That means we will invest only and only in those sectors which, as per our model, are relevant and required at that particular time for investing. At the same time, it will have a combinations of style which could be value, growth, momentum, quality based on the current market regime. As the market regime keeps changing, the style of investing will also change with the changing market. And third and most important thing, that it is an absolute alpha strategy. That means our ambition will always to have a substantial alpha over the benchmark for our investors, so that in a long run the strategy will generate that steady kind of return. Because in the market the style of investing keeps changing. So if you will see from 2013 till 2023, in different time frames, you have seen that certain style of investings have done extremely well, and some of them has been low. In active asset management business, every fund manager comes with a style bias. So he or she would have probably a style which he or she believes is right based on his journey of all these years. And as the style of investing keeps changing, the market also keeps changing. 1 second, somebody is saying that they are on a mobile and they are not able. Now, is it slightly better? I have just zoomed the screen so that you guys will be able to see a little bit more. Similarly, in a market, even the investments between large, mid, and small keep changing. That's the reason that this has been a flexi cap strategy. So, probably in 2013, if you see, only large cap had done better, but the preceding 2 years, that is 14 and 15, the entire small and mid cap did better, and the large cap did worse. Now, looking at the performance of large cap stock in 2013, if I start constructing my portfolio only in large cap driven, then 14 and 15 would have been the worst period for me. Then again, the mid cap did better. So, quant gives us a flexibility, unbiasedly change within the market cap based on the changing environment. Similarly, the sector rotations, which is one of the most important aspect of any investing, that the sector keeps changing with time, and that gets improvised more and more with the change in the time. So, as an active money manager, when, say, for example, if I have given some allocation to a particular sector, when the sector goes out of favor, I will always give a benefit of doubt for at least 2 quarters or more to that particular sector or a stock, so that they come back to their original growth. But when the sector moves out of the favor, we have seen that sometimes they remain out of favor for real long period. So quant gives us that kind of agility to change the sector as and when required. So this is the three important pillar of our quantitative investor. That first, it is completely style agnostic. As I said, that the style keeps changing, and our portfolio also changes the style based on the market regime. Second is sector. As and when the sector keeps moving, my portfolio will also have cyclicals, defensive, chemicals, reality, combination of sectors. And this being a flexi cap strategy, the most important aspect of this strategy is that portfolio will range between. So suppose if we believe we have, so for large, mid, and small allocation, we have divided markets into three main regimes: risk on mode, risk transitionary mode, and risk off mode. When we believe that we are in the risk on mode, the corporate earnings are at good pace, liquidity is at all-time high. Probably the portfolio gravitations will be more towards small and mid cap. When we believe that the markets are changing, and it's a time of undecided zone, where we don't know that whether the markets will go up from here or will go down, or market will languish at the current period, the proportion of small cap will come down, mid cap can slightly take a front seat, and large cap will get added to the portfolio. But in the risk off mode, where equity as an asset class are very volatile, not likely to generate the substantial wealth, that particular time the portfolio will go into cash and large cap, and small cap will be avoided completely, and at the same time mid cap will add little bit of more or slightly more than small cap, but small cap will become zero, but large and cash will be the substantial part of the portfolio. So this is what do I mean by changing. So this flexi cap strategy for quant investing helps us to do that. And this is here, if you see in my bottom slide, how the risk on, risk off, or this transition phase works. And this has been done by rule based architecture by us. My colleague Siddharth, who has built the quantitative infrastructure for PL, is also on the call. I'll just tell Siddharth to take a little bit on these three parameters, which are very important from investing style perspective. Siddharth, if you could just take them in
Yes,
bit detail.
sure. So hi guys, thank you so much for joining. And I think whoever has been acquainted with Aqua over the last say 1.5 year already knows the basic construct of the strategy, where we have the ability to be fluid and change multiple dimensions and parameters of the portfolio. And I think the biggest advantage that Aqua brings to investors is the ability to change its investment style based on the market conditions. Uh, we keep investors free and wealth managers free from worrying about which investment style to use in which phase of the market, which fund manager who has a particular style to allocate to in which phase of the market. So the whole idea of Aqua is centered around the fact that nobody needs to select a particular style of investing. The model itself can change its style based on market conditions. Not just style, also sectors. And if we look at all the different dimensions of the portfolio, we're basically talking about the ability to change the asset mix, which talks about how much equity, how much cash to have in the portfolio. In a strong market, it'll be 100% equity oriented strategy. In a weak market, it could still have equity, but slightly higher tilt to large caps. And in an absolute bear market, cash would be the dominant asset as well. You would use higher beta strategies like momentum, small cap in a risk on phase, slightly transitionary strategies like value or growth in a risk transition phase, and defensive factors like quality and low vol in a risk off phase. Uh, Aqua is also not averse to investing in cyclical sectors, PSUs. There are no biases whatsoever when we're talking about which kind of sectors are we open to invest in a cycle where cyclicals are likely to outperform. Aqua will stay heavily invested in cyclical sectors. As risk keeps moderating like it is now, we would obviously increase the mix of structural growth sectors. And as risk keeps reducing further, we would increase more secular, non-cyclical sectors, which have a very low beta as compared to the market. Again, the idea is change, adapt based on the market conditions. Don't have biases, don't have preferences, don't be fixated on any one style of investing. And I think our processes have stood the test of time over the last 15 months. We've backtested it for since 2006. In the first year of its launch itself, Aqua delivered a 75.8% return. Our since inception CAGR is closer to 65% over the last 15-16 months. 4 quarters plus have gone by and we've outperformed each of those 4 quarters. We outperformed the benchmark in each of the 4 quarters, which shows that the performance is granular. It is not concentrated across time. Also important to understand that this performance has come out from an equal weighted portfolio. It's a portfolio of 25 to 30 stocks, with each stock given the same weight at the time of entry. Very important here to understand that an equal weighted portfolio not only gives you granularity in returns, it also gives you repeatability of returns and risk being diversified across a set of stocks equally. What happens is the moment we take a biased weighting approach, for example, stock A has 12% weight, stock B has 15% weight, stock C has 4% weight, we usually see a strategy that could do well in a certain cycle, but is rarely repeatable in nature. So the whole objective of Aqua was to create a strategy that is highly repeatable in nature. The way we do it is we evaluate all the stocks across multiple factors. We look at systemic risk, which is more a macro aspect. We look at sector rankings. We look at style orientation. And once we've covered this top-down analysis, we also look at stocks from a bottom-up angle, where we look at fundamental factors like quality, growth. We look at valuation factors like dividend and value yield. We look at technical factors like momentum and volatility. We look at multiple of these factors. Every stock is ranked and rated on all these factors to give a final score. And your portfolio is actually a portfolio of the top ranking stocks, which has passed multiple tests. And our operating universe is top 500 by market cap, out of which we eliminate 100 stocks by liquidity and 100 stocks by fundamental red flags. So we're left with roughly 300 stocks. Out of these 300 stocks, we have to construct a portfolio of 25 to 30 stocks. And this whole exercise is repeated every 2 months because we believe in a periodic rebalance system. We want to stay as aligned to the market as possible. And the agility that a 2 month rebalance cycle gives us is that even though we might underperform in one phase of 2 months, we eventually can course correct if the style of the market has changed, if the sector preferences of the markets are likely to change, if the risk appetite of the market has changed. The periodic rebalance basically gives you the ability to course correct with a lot of speed and discipline. Overall, I think the key things one needs to take away about Aqua is that it's a flexi cap strategy. So it's fluid across the market cap spectrum in the top 500 universe. It can change its beta, it can change its sector mix, it can change its market cap mix, and it is designed using a process, a quantitative process, which gives us the ability to have repeatable performance as well. In the first year, Aqua has outperformed all the multi-cap and flexi-cap mutual funds in India and been in the top 3 flexi-cap PMSs of India as well in the first year. So this also tells you that, yes, we do have a very robust process, but the performance is also industry beating. And I think with PL's backing of 80 years and the wisdom and research expertise that we as a group have, Aqua tries to embody all of that and bring it together in one strategy. For investors, a clear advantage is that we are giving them a benchmark agnostic strategy. So it is not correlated to the traditional mutual funds or long only PMSs that might have benchmark hugging portfolio holdings. And there is no key man or fund manager risk because this whole strategy is run by quant models and processes, which is completely independent of personal preferences of me or anybody in the team. So it's a true blue quant fund, which gives investors an emotionless experience to investing. And that is why I think a lot of investors would stand to benefit from this as well. I think that is the broad overview on Aqua. I'm not going in more detail because you guys already know Aqua since the last 1.5 years. We've managed to garner what 475 odd crores. Of course, it's come from everyone from the PL team, and you all are well aware of Aqua and how it's really working. I'll give it to Nupur now, to take some of the other aspects of the global fund, the NRI, the questions that NRI investors might have, onboarding, regulations, etc.
So, hi, thanks, Siddharth, for taking this. Now, probably I've just explained before we started, I've just explained the process of probably subscription to the form, documentations, and the process of redemptions as well. We will just need a pre-filled form will come to you, just basic information of yours, which will be done by our team based out of Mauritius or India. We'll just put you to the team. They will take basic documentation from you. They'll send you the pre-filled form. You'll have to just take the printout, sign the pre-filled form, and send it back to them. As an investor, you will always get the NAV of a fund, and the NAV will be always reflecting in your investments or the statements that you get. Apart from this, if you guys have any questions, it's a certain dollar adjusted returns of the Aqua that you can expect and how it has done in probably last few years. So the difference between with cash and without cash is that when we were doing the back testing of our models, we had run 2 different models. The first model where probably strategy will stay invested perpetually, and the second model where the strategies will generate the cash as and when required by model, at an appropriate time, and these are the differentiation between with tax and without tax. Currently, the model runs only with tax. So the investment that you will do in Aqua will come with the with tax model, and that is what the return that you need to focus. Ignore the without tax column because that's not applicable any longer. There are some questions. I'll just take them probably in a chat box, and we already have. For tax perspective, any benefit for NRI SG based to invest through this fund or directly equity mutual? So see, from tax perspective, as I already said, right, if you are coming as a direct investor in India, then you are required to file income tax return at the year end, whereas in fund level, that has been taken care by fund and it gets adjusted in NAV itself. So as an investor, what you get is the NAV after adjustment of taxes. Is the model built in and construct done once at the time of launch? So this is an ever evolving model. I believe Siddharth has already touched base that point, but let me tell you that the basic architecture of model doesn't change, right? But with the time, the refinements keep happening, and that's an inherited advantage of any quant strategy. So as and when it changes, it will obviously have certain add-ons. It will have, but which always comes with the back testing and rigorously done. So it's not a one-time built model that okay, I built it in 2019 and I'll run it till 2030. That doesn't work. It's an ever evolving model which keeps changing. Our strategy for domestic and USD same? Yes, it is absolutely same. There's no change in if you come as an domestic investor stroke NRI, and for this dollar fund, it is absolutely same. There's absolutely no changes. Is the fund linked to Indian market stocks or overseas? It is pure and pure Indian listed equity fund only. So all investments will be done only in listed company in India across market caps, not going below top 500 company in India by market cap. If you guys have any other questions, feel free to ask before I go to the other points. So since I've already taken a Q&A, I thought let me just continue with the Q&A for some. Yes, Pankaj, you may ask your question, please. You have raised your hand. You can just type that in the chat box, or will UAE and the Singapore investors get benefit of double taxation avoidance benefits? Rohit, if you are on a call, can you just take this question?
You're right, right. It does. In fact, our fund, the feeder fund, is duly regulated by Singapore market under Regulation 305. So the fund has the capability to officially raise money from Singapore investors, and it will get the benefit of DTA between India and Singapore.
See, Kiran, all investments in Aqua will be accepted only in dollar funds, but definitely that dollar has to convert it into INR because we are investing in Indians, right? So because we are investing in India market, the currency, but the subscription will be accepted in the dollar terms itself. Yes, Mr. Rao, you can ask your question. So, how any tax benefit? How will the investment be done and in which city? So, fund is based out of Mauritius. The investments will be done purely and purely in India. Okay. So, Pankaj, the taxation for Indians, for NRIs is the same as a not. So, Rohit, here we'll be paying a long term and short term only, right?
Yeah, but can I pitch in here? See,
Yeah.
the NRI investor is investing into a dollar fund. Okay. Uh, the dollar fund is coming in the form of an FPI in the Indian market. So when the FPI is investing, NRI will not be paying directly to the Indian market. It is the FPI or the fund will be paying. Short-term tax rate is 20%. Long-term tax rate is 12.5%. This is for cash equity. And I'm giving more flavor. If the fund is trading into derivatives, because of the India-Mauritius tax treaty, no capital gain to be paid on any derivative. So these are the tax structures. The tax has to be paid by the fund, not by the NRI. NRI is just subscribing to the dollar units. So wherever the NRI is domiciled at, the taxation will be of that jurisdiction, not for India or not for Mauritius. Does that answer your question, sir?
Okay, thank you. There are a few questions in Q&A. I think so we have taken. Okay, there's one more. What is an advantage of dollar fund versus India fund? So probably see the biggest advantage is that as an investor staying outside India or an overseas investors, you have no liabilities over the tax which can be taken by funds. Second, you don't have to do any documentations also in India. No need to maintain your bank account, no need to maintain your demat account. So everything is taken care by overseas fund. So from documentation perspective to a taxation perspective, it makes more sense for overseas investors to take this route. Apart from that, if you see any other advantage, Rohit, for them, you may address.
Yeah, I mean, the complete regulatory licensing, the whole compliance management in India, counterparty interaction, everything is done by the fund, not by the investor. That's a big advantage.
Will fund invest in derivatives? As on date, no. As on date, Aqua is a long only equity fund, so no derivatives exposure at all. Initial payment is in USD 1,25,000 US dollar is a minimum investment. Yes, funded at a single month and NAV. Rohit, if you could just for everyone's better understanding, if you can just take them through the NAV calculation process, because that's something which everyone would be more interested in understanding.
Sure. So this is an open-ended fund. Suppose I get 5 investors initially. The fund will make investments depending on the local valuation in India. There will be a valuation of the fund. There is some appreciation happening on the underlying when the next investor comes in. Prevailing on that monthly NAV for the fund. So whatever.
Sorry, Rohit, your
amount divided by NAV.
Rohit, you'll have to repeat because your internet was
investors.
slightly unstable, so there was some drop.
Yeah, actually, I was getting a call. That's why I'm so sorry for that. So since it's an open-ended fund, the NAV will change on a monthly basis. Whenever an investor comes in, the prevailing NAV will be allocated. So the total amount divided by NAV is the number of units what the investor will hold. And the NAV continues on a monthly basis the valuation of the underlying, which is in the Indian market. So it's like any other fund, which is a global fund, where the underlying is in India. The valuation draws down from India perspective to the fund, and the fund will issue a NAV to the investors.
Sure. So, Mr. Rao, you'll have to just type in your question because it's a webinar, so unmuting is not possible. You can just type either in a chat box or Q&A and any one place. Probably if everybody doing Q&A, it will be easy for me because I'm juggling between Q&A to chat box and we'll be able to. Please give more clarity on the taxation if the client is based on Oman, how much he will be taxed. So, Rohit, any tax advantage for Oman, Mauritius?
Again, I may not be knowing the tax liabilities in Oman, but from a Mauritius India perspective, the fund has to pay short-term 20%, long-term 12.5%. That's it. And this is how we will remit back money at the time of redemption. But whatever has to be paid locally, I may not be the right person. right? So if Oman says that, whatever taxes you have paid back in India, they will account for that, then you don't have to pay anything. But a local chartered accountant will be able to tell you more evidently and more accurately about the local tax requirements in Oman.
So NAV, so as I said, that we accept subscription between 20th to 25th. So you will get that month end NAV. Similarly, at the time of redemption, we generally prefer accepting redemption between 15, though it's an open-ended fund, so there's no hardcore date, between 15 to 20th. So accordingly, it will get adjusted. So when you will redeem, you'll get that particular month end and same day. What are the documentation required? So it's a very simple documentation that will be taken care by either Mauritius or an Indian team. We will require certain basic information in an Excel format. Once we receive those basic information, the team will pre-filled form and send it to you. But I don't see there are complications because we have enrolled the investors. But any specific documentation that Rohit you would like to touch base, please take it forward.
So this is a simple subscription agreement along with your KYC. Now the KYC is your proof of identity, proof of address, and there's a local requirement from a FATCA, CRS, and PP declarations, politically exposed person. FATCA, CRS is a very common phenomenon these days. So apart from KYC, the subscription form, FATCA, CRS, PP, nothing else which is required.
So, see, Mr. Rao, your question is that if it is at the fund level of Singapore, please understand that the fund will be paying a tax on the gains in India, not the differential. So, say for example, for any investors, right, this comes in an FPI, so that will get how we'll get the benefit. So, Rohit, once we pay the fund, the NAV will get adjusted accordingly, right?
You're
Once we pay
right.
the tax.
You're right. You're right. So the amount will be on the published NAV to you. NAV will always be tax adjusted.
What kind of reports that, so you will get the NAV detailed report, and what are those we had worked out certain basics, Rohit, that what that reports will share. So if you could just take that as well.
So this is a simple NAV statement. When you invest into Indian mutual fund, end of the month or end of the day, what you get is a NAV statement that you're holding these many units. This is the value of each unit, and this is the current valuation of your investment. This is what investor get, right? Also to the fund manager, because the fund manager controls all the investments. There's a holding report which goes to the fund manager. So these are the two basic reports. End of the year, there's a P&L balance sheet, which is done by the fund. These are audited funds, regulated funds. So that's on the record side, what we keep at a fund level.
What are the documents required? I've already said minimum amount USD 1,25,000. So documentation in USD has been taken care of. Are all RBI SEBI clearances obtained? Obviously, yes, we have all required RBI as well as the regulatory. It's a pure clean fund. So whatever we are doing is legally known and informed, and obviously, as fund is also paying a tax, it's filing all kind of returns in India, right? That is also
Yeah,
there.
all the tax returns are filed in India by the FPI. The FPI is already governed, regulated, and approved by SEBI. In fact, the fund manager in Mauritius is also regulated by SEBI, just for your comfort.
So probably at the time of either subscription or a redemption, as you rightly said, that day INR dollar INR is what you get that back. Any questions that the participants has, feel free to ask us, please. So you'll have questions. So fund, we have already explained. Technical aspects of investing has already been explained. The operational aspects of the fund has also been discussed. but still we'll keep. Why I'm not taking too into a detail, because I want you all to ask a technical question which we'll be able to do. Will client get a contract? Pankaj, client doesn't. This is an F, so client doesn't get any contract note, right? Because the investment is done on a fund level, and the PAN card is of fund and not of an investor. The other investor doesn't need a PAN card at all. No,
Right.
sir. US investors are not required to be present in India, because investors are not doing any documentation in India. Investors are doing the documentation outside Indian jurisdiction. So the physical presence of investor either at the time of subscription or redemption in India is not at all required. That's the biggest advantage. No, this cannot be tracked through the app, but yes, you get a NAV statement every month via email from RT. Obviously, see, whenever you are coming as a direct investor or has a via fund route, currency fluctuation always needs to be accounted. So return gets impacted. But what if other way, right? If what if rupee probably depth? So that's no man guess, and that's I believe it's not an appropriate for me also to make any guess on currency as we speak today. Is the underlying fund the strategy exactly? Yes, it is absolutely same strategy, Mr. Thakkar. The same process, same strategy, everything is same. No change at all. Yes, funds are required to be transferred from clients' overseas bank account itself. So they will remit to the State Bank of Mauritius account of a fund from their overseas account. So redemption and additions can be done via Swift and RTGS, Swift or electronic transfers, and you can just send us to this. As on now, there's no mobile app by which you can do the redemptions or new content.
So there's a simple single page additional subscription form to be filled. Along with the form, you give us the SWIFT details of the wire remittance. That's it. That is what is required for an additional subscription. And similarly for redemption, you just sign a redemption form. The accounting team will publish the last available NAV and the dealing date, and you will get the money. So very simple process. But unfortunately, the merchant market currently insists on paper documentation, which is we need the forms to be signed both for additional subscription or redemption.
So see, this is, please understand that on a fund level, the client gets all the information. So regulatory aspect, Rohit, we provide the NAV statements, right, to the
Yeah,
client.
right.
There's no
Yes,
login.
akin to like an Indian mutual fund. Suppose if you invest into an Indian mutual fund scheme, will the Indian mutual fund scheme publish a holding at an investor level? No. They will just publish at an overall level, and what investor will get is a mutual fund statement. Akin to that. This is what you will get from us.
We will take a question next. After that, so probably no, through app currently you can't track it on a daily basis. It's not, because we only publish NAV once a month, right? So that's how the calculation is done. So on daily, it's not possible. Through mails, report comes for sure. And in case if you need some report, you can always send a mail, and a probably team will send it across, or will get it arranged. So any other questions? So participant, the basic idea of the call was to give you a glimpse at PL as an organization. Now we are also present in a global fund, and at the same time, you will be able to get the benefit of one of the fastest growing economy, and you can participate without any hassles of filing your return, keeping your documentations in India, or getting worried about it. So that's the biggest advantage for all overseas investors. We welcome them via our dollar fund. If you want us to take you all through the strategy in further more details, me, my team, every one of us are always available. and we'll always able to get you. Client will get set of benefits of taxation paid on the fund level. Or
Yes, sir. The answer is yes for US investors because we also have the capability to issue K1s to US investors. These K1s are nothing but we will calculate and publish that whatever taxes have been paid at an investor level can be set off against their US returns. So this facility is available for US investors.
great. Shall we wait for some time or conclude the call if there are no further questions?
So other countries do not have a similar practice what the US follows, that if you're paying any taxes in another jurisdiction, akin to or similar to K1 report, there's no such facility for other jurisdiction. Specifically for US, this is available and we do that.
So, Kiran, to answer your question, client will be investing in Mauritius fund for sure, but that fund is not investing in Aqua. No, that fund has a separate account, separate existence, separate status from Aqua. The process of investing is same, but not the. So it's not that the fund will go and invest in Aqua. No, it's not like. Thank you, Mr. Subramaniam, for attending. It will lead to double taxation. No, Pankaj, it cannot lead to double taxation, right? Any further question from anyone? Thank you, participants. Thank you for attending this call. We really appreciate your time and patience, and we are always available. Anybody has a query, I'll just share one small thing for you guys that if you want, can just write down in a chat box about the emails or the contact details at which you guys can reach out to us, because that's very, very important. So for some time, I'm just putting in that. If you want, I can just do slide or I'll just touch here. So it's a global, I'll just type. So that I'll type in chat box and as well as Q&A. How you guys will reach out to us, that process I'm just doing right away for you all. Just 1 second. This is the fund email ID. You all can reach out to us on this email ID. I'm also sending you the fund's WhatsApp number. So in case if you all want to get in touch with us over the WhatsApp, or you want to do a WhatsApp call personally rather than sending an email, that number is also available. I'll be also putting in my personal handphone. So this is a fund's WhatsApp number. You can reach out to us on this WhatsApp number, and all information related to the global fund will be provided to you all, and you can connect also via calling this fund. However, I'm just typing my personal handphone number also. If anybody wants to get in touch with me, this is my personal handphone number and my personal email ID. Both I'm just typing in here in the chat box. Everyone can take it from the chat box. It's open to everyone. Once again, thank you very much, everyone. We'll conclude the call. Thank you, Rohit. Thank you, Siddharth, for hosting this call along with me. We look forward the subscription from everyone, and we welcome everyone to the one of the fastest growing economy in India for their participation. Thank you, everyone.
Thank you, everyone.
Thank you.
Thank you so much, guys.